Markets are kicking off a new week and a new month. Joining us now to discuss what to expect ahead is Robert Schein, Chief Investment Officer at Blanke Schein Wealth Management. Robert, great to have you here with us.
Great to be with you.
All right, so January is in the books, kicking off February here. We saw some upside in January, but not without some choppiness. So fill us in on what your expectations are for February and the rest of the year. Is there real upside ahead?
We got a great start for February right now, and January was filled with uncertainty. I think that's going to be the theme for 2026. The uncertainty is going to be the certainty is basically the takeaway for investors to be positioned for this year. We're going to see a lot of what the S&P 500 continues to report, but of what we've seen so far, 33% of the S&P is reported, and it's positive double digits. So this is the fifth quarter, if it continues, to see 5 quarters in a row with double-digit earnings growth from the S&P 500. So that shows that corporations and companies are earning, and that's solid moving forward.
So how do you position your portfolio for uncertainty?
Last year, we started broadening out. Even though tech is a lion's share of the earnings contribution for the S&P, we started rebalancing and diversifying that out. So, and what we wanted to see is that broadening out effect. We saw it in April as well as in the midsummer, and even towards year end, as you see, tech wasn't the leader. Some of the tech companies are spending hand over fist on AI. We continue to see that spend potential question mark for this year. Will they spend at the rate, and will that impact margins for tech? So investors have to look outside technology. We have financials, other areas that are going to be even cyclical in nature could broaden out. So we're seeing financials and healthcare as well as even energy starting to kick in here for the new year.
And we're seeing that broadening out just in terms of the major averages as well. We have the Dow, NASDAQ, and S&P 500 up at least, 2% so far in 2026. The Russell is up 7% almost. So how do you think about large cap versus small cap as you're constructing your portfolios?
The small caps are starting to, move into gear, which is very, very positive. There's a lot of cyclical backdrops that are going to help. You have the one big beautiful bill that's going to help the consumer. That's also going to help the spend. That's also going to help the earnings. And that's going to move down the valuation stack, as you point out, not just large caps leading the way. So investors need to think about positioning mid caps, small caps, and it's great to see the Russell finally moving. And oh, by the way, if we do see the Federal Reserve continue later this year, maybe summer, with another rate cut, that's only going to help the Russell 2000 companies, the small caps.
So what sort of expectation should we have in terms of how much higher the market can move from here if it's things like small caps or financials or energy leading the market versus tech? Where do we go?
It's a great question. I think financials are a great spot to be in, leading the way. And we're going to see pickup in M&A. We already have. Also, if you look at the brokers, the earnings contributions from just trading, M&A deal activity is going to start picking up for 2026. There's a bright sort of future in that space right now because of the deal making and the positive attitudes relative to the economic backdrop that we have. Again, the fiscal and monetary policy hopefully leading the way and staying aligned moving forward to support a lot of these economies. But financials are great. And some of the cyclical sectors that we would like to see participate, such as housing this year. I think that's the biggest component. I know that the Washington's looking at the affordability issue. I think Wall Street's looking for housing to sort of stabilize in terms of just expectations from sellers to buyers in the housing market. If we get that contributing and moving forward and unlocking the housing and maybe even lower mortgage rates, possibly, that's going to truly help. Housing could be very interesting as well.
Okay, so any particular names that you like in the financial or housing space?
Well, there's always Toll Brothers we like. Financials, there's Goldman Sachs and Morgan Stanley. Goldman Sachs leads on the deal making, and they've had record-breaking years, and Morgan Stanley as well. Those are key contributors, key leaders, and they will continue. And also, don't forget, like, there's in the tech space, like Microsoft, it sold off last week. It had solid earnings. Microsoft is something for investors to take advantage of in days like today and weeks like yesterday or last week.
So you don't want to abandon tech, but you don't want to be overweight tech. Is that basically the takeaway here?
Exactly. Look at your investment portfolio. Most, if not all, I would submit for consideration are overweight tech, simply just by, even if you own the S&P 500. So there are other opportunities out there, but technology is still going to lead, especially the contribution. They're growing double-digit rate of return, even in 2026 and 2027 projections.
Okay, so you're buying the Microsoft dip. A few other things that we're seeing a dip in right now: gold, silver, and Bitcoin. How are you thinking about those three as it relates to your portfolio?
Yeah, I think gold and silver, you're quite frankly seeing the volatility of what the precious metal space and investing in that space actually feels like for investors. And so we were positioned last year for our clients, but selling to some of the strength, as we believe that the precious metals will still continue to have a good year in 2026, but taking some off the top would not be a bad thing for investors. As far as Bitcoin, we don't advise on it. We do position a little bit in client portfolios based upon some ETF adjacent opportunities there. But at the same time, Bitcoin is one of those where we're just gonna have to wait and see on it. I think Tom Lee just said that it bottomed this year, just last week. So we'll see how this all plays out for Bitcoin this year.
But going back to gold, selling the strength, are you buying the weakness that we've been seeing since Friday, really?
Yeah, if we're overweight, we're lightening up. We have been in January. But for investors that want to be in the precious metal space, now's a good opportunity to take a bite at the apple there.
Okay, so just to wrap things up, your best advice for investors as they think about navigating the uncertainty that you talked about and navigating potential volatility, because we know midterm election years can be volatile, and we've already seen it in January.
Yeah, we've had three, back-to-back years of the S&P 500 showing excellent returns. The only way we see the way forward for that for investors to capture even outsized returns outside what the indices will provide for us is simply think of it this way. You just have to keep some dry powder to take advantage of that uncertainty and that volatility. Like I said, if you look at even companies like Disney today are selling off on a solid earnings in the first 100 years of their company. They just, had a quarter of $10 billion, and their theme parks are thriving. They're going to have a succession plan moving forward. But that being said, the turnaround story under Bob Iger, let's say for Disney specific, that's an opportunity where a single company has a turnaround story that could do better than the market itself. So investors just need to keep some dry powder, and active management will win out once again. And we've seen that consistently play out over the last few years. We believe active management is the place to be.
Are you using some dry powder to buy this Disney dip?
We are. Yes.
All right. Anything else on your shopping list that you're waiting for a deeper dip for? Tell us what's on there real quick.
I think there's the Netflix story right now. I think Netflix is the leader and will continue to be a global leader, and they're winning through live action sports. And I think if there's any weakness in Disney or even Tesla, investors should be looking towards adding to their portfolio.
Okay, we'll leave it there. Robert Schein, Chief Investment Officer, Blanke Schein Wealth Management. Thank you so much.
Great to be with you.
Blanke Schein Wealth Management is a group of investment professionals registered with HighTower Services, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanke Schein Wealth Management and HighTower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanke Schein Wealth Management and do not represent those of HighTower Advisors, LLC, or any of its affiliates.